With this simple trading strategy, you are going to be able to turn a $500 account into a $500,000 account in a matter of time, because the strategy that I'm about to share with you right now is a mind-blowing strategy, but so many people do not know the power of this strategy. This strategy has generated a lot of money for me, and I must tell you the truth, this strategy is very, very profitable. So what I'm talking about the moving average crossover. So in today's video, I'm going to be showing you how you can use the moving average crossover to make money in the forex market. There are so many strategies in the forex market, but if you don't want those complicated strategies that are making you more confused instead of understanding what to do, the moving average crossover is the best strategy that you need to develop. So the moving average crossover has to do with two lines, right? It has to do with two lines. So what you are doing is you are waiting for a crossover. When the faster moving average crosses above the slower moving average, it indicates that there is a change of trend. So this strategy works extremely well during a trending market, and this strategy is for trend followers. I promise you, if you master this strategy, you are going to make money consistently in the forex market. I'm not saying you are not going to lose. You are going to lose some money, most especially during ranging market, but you need to include price action, that is support and resistance, for you to minimize the whipsaw. So this strategy that I'm going to share with you guys is for day traders and scalpers, right? So if you want to cash enough pips during a trending market that happen within a day, this strategy is for you. The most important thing you need is money management. You should learn how to minimize your risk. Like I said in all my videos, you are expected to risk at least 1% of your trading capital, because money management still remains the key to forex trading. So I'm going to dive straight to the chart, and I'm going to show you how you can be able to trade this moving average crossover profitably, so that you can be able to make money in the forex market. So for you to start, the first thing you need to do is to head onto your trading view, go to the indicator tab and click moving average exponential. Once you click it, it will come out. So you click it 2 times, right? Then the first one will be set at 20 EMA. So the period is going to be 20 EMA, right? While the second one, the period will be 5 EMA. So the first one, you are going to change the color of the line to maybe black, while the second one, you change the color of the line to maybe blue, so that you can be able to differentiate between the faster moving average and the slower moving average. So what are you doing after setting this up? You are waiting for a crossover, right? So this strategy for day traders work extremely well on a 15-minute time frame. So if you're a day trader, you can use the 15-minute time frame for this strategy. So once you have your 15-minute time frame and you have plotted your two moving averages, the next thing you have to do is to exercise patience and wait for what? For crossover. But before you do that, you need to go to the higher time frame to look at the market structure. So you need to know whether if the market is in an uptrend or in a downtrend or ranging, before you can be able to trade this strategy profitably. So once you have understand the market structure, so if the market is in an uptrend, you need to watch for crossover, right? Above, that is from down to up. If the market is in a downtrend, you need to watch for cross below, that is from up to down, right? But if the market is ranging, honestly speaking, you just have to stay away from the market, because this strategy doesn't work well during a ranging market. So there are so many pairs that you can trade, right? So what you need is to look for a market that is currently trending, then you watch for crossover, because crossover dictates what? A change of trend, right? So if the market was previously in a downtrend and there's a crossover after some range, it means that the trend have diverted from a downtrend to an uptrend. And if the trend was formerly in an uptrend and there was a little consolidation and the trend now reversed from an uptrend to a downtrend, it means the trend have changed direction. So the crossover will help you to know the trend that is in place, right? So once the faster moving average crosses above the slower moving average from below to top, it means that the market have changed from a downtrend to an uptrend. But if the faster moving average crosses below the slower moving average from top to bottom, it means that the trend have changed from an uptrend to a downtrend. So in this strategy, you don't need too much technical analysis, you don't need too much brainstorming, you don't need any confusion. What you need is just the two indicators. Like I said, first will be set at the 5 EMA period, while the second will be set at 20 EMA period, and the time frame is 15-minute time frame. So you're going to make use of trend line. So trend line will help you to avoid whipsaw, right? Not that you're not going to get whipsaw, you will get whipsaw, but trend line will help you. So what you do is you go to higher time frame like the 1 hour time frame and look at the directional movement of the trend. So if the trend is going up, use your trend line to connect the lows of the 1 hour time frame. But if the trend is going down, then you use your trend line to connect the highs at the 1 hour time frame, right? And then you watch for crossover, right? So the trend line will help you to know whether if the market is currently trending or not, right? So if the market is trending up and the crossover happens, right? If the market is trending up, right, and suddenly the market started to, if the market is trending up, right, and then suddenly the market begin to move slowly, then suddenly the market now cross over from top to bottom, that is a signal to sell. If the market was going down, suddenly the market lost momentum and started to move slower, then before you know it, the market now crossed above the moving average, that is the faster moving average now crossed above the slower moving average. It means that the market have changed trend, right? So the price have changed from a downtrend to an uptrend. So now let me show you an example of what I'm talking about so that you understand what I'm talking about. So this is how the moving average crossover will look like, right? So like I said, once you open your chart, your trading view, you can simply plot these two indicators, right? The 5 EMA and the 20 EMA. Like I said, the 5 EMA is the faster moving average, while the 20 EMA is the slower moving average. So what you're watching for is a crossover, right? So whenever a crossover happens, it means that the trend have changed direction. Now if you watch here, you see that the trend was formerly going down, the market was formerly in a down move. Then what happened? There was a crossover here. So immediately the crossover occurred, the trend now went up, right? So now what happened again? The crossover occurred again here, right? The price crossed below the 20 EMA as well as the 5 EMA crossed below the 20 EMA, and the sellers took over the market, right? So they pushed the price all the way to this point, and what happened again? The price crossed above the 20 EMA and the 5 EMA crossed above the 20 EMA, and the price now changed direction. So for the fact that the price have changed direction, the price tends to seek support from the 20 EMA if the price is trending up, right? If you watch, see that the price is now touching the 20 EMA, turning the 20 EMA into what? A support level, right? So the same thing applicable to the down move. So when the price crosses below the 20 EMA, the 20 EMA automatically becomes the resistance level, because when the price goes down, it will make a pullback to test the 20 EMA before the down move continues. So that is why once you are trading with this strategy, you need to be looking at what? Crossover, because crossover will be able to tell you the beginning of a new trend. Because once you sight a crossover, it tells you that a new trend has just begun. So it will help you to enter the trend earlier compared to others that enter the trend when the trend has moved so far. So the crossover will give you a better entry trigger, right? Because once the crossover happens, you take your trade immediately before the market moves, right? So some traders that are not using this crossover strategy may enter their trade when the price must have moved so far. So that is why you need to monitor your chart once in a while to seek for crossover. So once you identify a crossover on a particular pair, you simply trade in the direction of the crossover. And like I said, if the market was going down before and suddenly the market begin to range, right? And before you know it, the market now crossed above the moving average. That is, the 5 EMA crossed above the 20 EMA. This tells you that the momentum of the market have changed from sellers to buyers. It means that the buyers have stepped into the market and they are going to push the price up. So let me give you another example of what I'm talking about. Now look at this chart very well, right? This is what I'm talking about. Like I said, this strategy is very simple. What you need to understand is to be able to identify the crossover. So once you identify the crossover, you trade in the direction of the crossover, right? And like I said, this strategy is not the holy grail, right? Sometimes you are going to lose, right? But for the fact that you have a better risk reward ratio, you are going to recover your losses in a matter of time, right? So with this strategy, you can simply use 20 pips as your stop loss, and then you target at least 100 pips or 150 pips as your take profit, right? Or you wait for crossover. So by waiting for crossover, you might be able to ride a massive trend. So imagine, what if the market moves 200 pips in a day? That means you are going to cash a whooping 200 pips in a single trade. And if the market moves 500 trips in a day, you're going to cash a whooping 500 pips in a day. And you know how much that is. So you are risking $20 to make $150. So that is a powerful risk reward ratio. So it doesn't matter if you lose sometimes, there's still a probability that you are going to recover your losses. So that is why you need to understand the concept very well.